Are you currently wondering if it is a good time right now to invest in the stock market during these bloody days? In fact, over the last couple of weeks, we've seen that the stock market has started to massively correct in certain cases. So today, you'll find 3 great undervalued stocks that are currently available on the stock market and that have a lot of potential of upside over the next couple of years and decades. So I've spent the last couple of days searching and analyzing a bunch of different stocks to find which one are the best to invest in right now, and here are my results. The first company on my list is the American gaming company Unity Software with the ticker U. This business that currently worth slightly less than $10 billion and that has been down of about 10% since 1 year could represent a great buying opportunity for many investors. Unity is a cross-platform game engine, or if you prefer, it is a tool that allows you to accomplish different types of tasks related to game production process. So Unity provides the game developers with a 2D and 3D platform to help them to create the different video games, and it is what makes this platform pretty appealing for many creators since they don't have to start from scratch. Just keep in mind that Unity will take care of important gaming concepts such as the 3D rendering, the physics, and the collision detection. And with a video games market that is set to grow on average of about 13% per year up to 2030, it makes that this type of business could see some interesting growth over the next couple of years. However, the big problem with Unity at the moment is coming from the fact that the company itself has recently said that they were going to introduce a new runtime fee starting in 2024 based on the number of game installs. And this news that could imply a certain diminution of the number of users using Unity has actually had some pretty bad impact on the stock's value recently, where we've seen that in October, the stock has massively crashed. Add to this recently, we've seen that the CEO of the company has stepped down, notably because of all the critics that he has received. This news could be seen by many investors with a good eye, but keep in mind that a switch of CEO obviously implies more volatility for the company that is concerned. And in the case of Unity, with a beta of about 2.5 over the last 5 years, we can see that it is already a company that is quite volatile. But on a more positive note, we can see that Unity earnings have been quite astonishing over the last couple of quarters. Indeed, they've been able to massively beat the earnings prediction by the analyst over the last couple of months. And in their more recent earnings, we've seen that they've been able to grow their total revenue year over year of over 80%. And with their next earnings report that are set to come out on the 9th of November 2023, it might be a good idea for you to have this stock that is currently sitting at its 52-week low on your watch list for the next month. Now, the second stock on my list is the Elon Musk company Tesla with the ticker TSLA. This business, known by many investors that worth over $500 billion, is the largest electric vehicle companies in the entire world, where in the third quarter of 2023, this business has been able to produce over 430,000 new cars and generate some revenue of over $23 billion. Obviously, you can understand that they are generating the largest chunk of their total earnings from the sale of their electric cars such as the Tesla Model 3, X, and Y, but they've also been able to make a certain part of their total earnings from the sales of their electric batteries such as the Powerwall, which actually store energy, detects outage, and automatically becomes your home's energy source when the grid goes down. And they also produce solar energy for commercial and residential needs. However, this business has recently seen some massive decline in their total valuation due to many important factors. One of them being that with all the tumultuous times that we are currently facing, we've seen that Tesla has recently cut prices on many of their cars. Obviously, this can be seen as a very positive news for everyone that wants to buy a Tesla car in the next couple of months and years, but the investor didn't have the same reaction to these news. In fact, it means that with the same number of cars sold before the cut and after the cut, the total profit margin of Tesla will diminish. And so the only way that this could become a positive news for the investors is if they are able to increase the number of cars sold to increase the total profit of this company. But since we all know that all the macroeconomic conditions are not as optimal as they were before the pandemic to buy these kind of cars, it might be a great challenge for them to increase their total profits in the upcoming years. Indeed, despite seeing some great increase in their total production and deliveries of their Tesla Model 3 and Tesla Model Y cars, we've seen some important decrease in the production and the delivery of their Tesla Model S and X. The problem with that is that the segment that is concerned by the increase is actually the cheapest cars offered by Tesla that are worth between $50,000 and $60,000, where the important decrease has come in a segment of cars that are worth between $100,000 and $110,000 per car. And when you combine this with some increase in the operating expenses of this company, driven by the Cybertruck, the AI, and other R&D projects, this has actually been diminishing their operating income year over year of about 8%. However, one important factor that I like to take in consideration when I want to invest in this market with some high interest rates is the amount of debt that the companies have. But in the case of Tesla, we can see that they have a pretty low debt to equity ratio, which means that this company is not too much dependent on the fluctuation of the interest rate. But with some pretty important revenue growth over the last couple of years, I still have some high hopes concerning Tesla because I believe that this company will still be one of the most important companies in the next couple of decades. So the recent drop that we've seen with this company might represent a great buying opportunity for many long-term investors. But talking about great buying opportunities that can be found on the market right now, my next pick on my list is the American financial company SoFi Technologies with the ticker SOFI. SoFi is a small American bank that is worth less than $10 billion, but as the big banks, it is still offering most of the important financial services. For example, it offers great personal loans, mortgage loans, credit cards, insurance, and investing products. And so one of the important differences between SoFi and the big banks is that it will tend to grow faster since it is way smaller, as we can see in their latest earnings report, where they've been able to massively grow their total revenue as well as their total earnings. But as a smaller company, it also implies that this business will have a lot more volatility compared to the average bank, where it has a beta of about 2. Personally, what I like about SoFi is all the crypto services that they are offering to their users as well as their personal use of the AI. Indeed, SoFi use data to make well-informed decisions about everything from product development to marketing campaigns, and they like to use artificial intelligence to automate and streamline tasks to reduce the financial platform's operating costs. At the same time, by opening an account with them, you have the possibility to invest in the booming crypto market and to invest in some of the most important cryptos such as the Bitcoin and the Ethereum. And with the recent push that we've seen with the crypto market, notably with the Bitcoin, it makes that the company could see some great profit from it. All of these factors have helped SoFi to grow their total members by about 45% year over year. But an important risk that you take when you want to invest in this American bank is coming from the SoFi's lending system, which is considered as a gain on sale model. It means that SoFi is creating different loans and shortly after they are selling them to important financial institutions. For example, different bank holding companies, instead of keeping these loans on their balance sheet and earning the different interest. The danger of it comes from the financial contagion that could occur when the financial crisis spreads from one market or region to another one, and this could cause at the same time considerable decrease in the demand and pricing for loans in the country. Nevertheless, with all the growth that this company has seen over the last couple of quarters, and since it is currently trading at discount, I personally have some high hopes concerning SoFi that it could continue to grow pretty well over the next couple of years. As you can see, after seeing some important growth on the stock market since the beginning of 2023, the last couple of weeks haven't been that great for the different investors. Obviously, many people might be afraid to take risk in these kind of conditions, but as Warren Buffett once said, be fearful when others are greedy and be greedy when others are fearful. So it's not really the time to invest in the stock market when everything is massively up, but more when everything is going down. Keep in mind that timing the market isn't as important as the time that is passed throughout the market. But it is also why it is crucial for you to invest in companies in which you have a big trust for the long term. But on your side, if you don't want to pick the different stocks that have some potential to outperform the market, you might want to invest in what are considered as the best ETFs. And to find what are the best ETFs to invest right now in 2023, check out the video that's gonna be right over here, and I will see you soon. Peace.